What is the market looking like after CPI? At what point are we going to see a reversal? How high can that reversal take us? What is the macro chart looking like? And could Bitcoin push lower? These are the kind of questions we're going to be answering in today's video, so stick around to the end. Okay, MegaWhale team, welcome back to the channel, guys. I hope you're all having a fantastic day today. We're going to be discussing the 4 points mentioned in the intro. That being the short-term price action, the traditional markets in relation to CPI, obviously the possibility for a continuation downward or a bounce, and the macro price action. Before we do get stuck into it, smash the like button, hit that comment button, and subscribe to the channel for daily videos on Bitcoin and the broader markets. Now, you can also find us on Telegram. That will be the second link in the pinned comments down below. You'll get access to our Telegram channel where we post all of our updates, charts, videos, analysis, information, news events, and more. Now, if you're interested in our trading channel, you can join our VIP channel, guys. You can find all information in the pinned comment over here, what you'll receive, and what is the VIP channel in general. You can also find all of our trading results by clicking the link over here from February 2021. You can see all of our breakdowns. Before we get into it, guys, go ahead and make sure to check all those out, and let's get into it. We'll start off with the market data today. So February is down 4.36%. Again, 14 days into the month now, 15 days into the month. Not a lot of movement in comparison to January, where we would have already seen like a 20% rally. So like we said already, we did expect February to be a little bit less of a volatile month. We expected a little more consolidation, and we expected February to be red. And so far, all of those three things that we expected have occurred. Currently, volume is up 13%, sitting at 91 billion. You can see that on the top left-hand corner here, and you can see liquidations are down 16%, which is surprising considering we had a CPI release to 78 million. Volatility is 2.19%. It has dropped off a little bit and looks like it will continue to drop down as the price compresses and consolidates as this volatile surge, this surge in volatility we had in early January gets kind of rolled over on that 30-day period. Moving on to liquidations, we had seen obviously CPI come out. We saw a lot of shorts liquidate. We also saw quite a bit of money in longs liquidate too, as the price had that initial drop. But all in all, guys, we had a very volatile CPI in terms of price action. In terms of percentage moves, not too much, but we saw a lot of moves down, then back up, then back down, then back up. It was very, very sporadic. And considering CPI came in above consensus, the price action rising here is very confusing and concerning for the markets, but we'll go ahead and discuss that in today's video. So let's go ahead and jump into the broader markets. As you can see, guys, the DXY did take an initial dump on CPI release again, which is surprising as the CPI actually came in above expected. The expected CPI over here will show you in the channel over here. If we go ahead and get down to the bottom, we can see for core inflation, the consensus was 5.5. The result was actually 5.6, sorry, I don't know, I had 5.5 here. And obviously for year-on-year inflation, our consensus was 6.2 and we saw 6.4. So we were slightly above on core and year-on-year inflation then, which indicates inflation has actually risen a little bit, which obviously would indicate interest rates have not been doing their job effectively enough. And that could lead to obviously interest rates not rising, or should I say not falling at that same trajectory we've been expecting and the market has been expecting in the environment. We talked about this over here. We talked about the expected trajectory of the interest rates dropping over the next few months. Now that we saw CPI rise, okay, we could potentially see those interest rates see a little bit of a rise going forward, or at least stagnate around the current rate and not drop for a little bit longer. And that shifts that systematic risk in the market as the pivot could potentially be pushed down the road a little bit again, and the pivot is that narrative that the bulls are really relying on to push the prices up. So that could shift the current economic environment, and more importantly, the current systematic risk in the financial markets, which drive price action. As you can see, DXY is still very much in the same position. However, we do need to be breaking through this light blue resistance zone. I don't know why I have it blue, it should be red, but it's blue. We need to break through our blue area here to see a continuation upwards. Until then, we do run the risk of retracing all the way back down to around 102. Looking at the Dow Jones, the Dow Jones failed to break upwards from the symmetrical triangle formation, even with that CPI. And again, like I said, a CPI came in negative, so there's no reason why we should have seen too much of a rally upwards. In fact, we have pushed upwards here and we got rejected. We are looking for a daily candle close. Remember, the daily candle close above or below this symmetrical triangle will determine the directional continuation for the price action. Meaning, a daily candle above will continue the price upwards, a daily candle below will continue the price downward. Our targets are these corresponding horizontal lines on the downside and the upside. Moving on to the S&P 500, you can see a similar thing happened here. We pushed upwards, we tested resistance, we failed to break through. So same thing happened on the Dow Jones there. We pushed upwards, we tested resistance, we failed to get above. As you can see, we are now coming back down to approach this uptrending support line. If we do fall below this uptrending support line, we will also be falling below the current local high or current horizontal support on the chart, which could result in a double support break and continuation downwards to 4,000 to 3,960, which is our POC level. Of course, if either of those things occur, the markets will continue down and Bitcoin is more likely to drag below 21,500, which is our trigger zone. Looking at bond yields have pushed up to the major resistance, the next key level of resistance, 4.6, breaking through 4.6 could send the markets higher. This is a glimmer of hope for the markets over here. If the bond yields reject over here, the DXY will fall from here and the markets will rally. So again, we are stuck within this weird little place between support, between resistance. Bitcoin is not quite yet underneath the major trigger for the short-term continuation downwards, but it is not yet above the trigger for a continuation upwards, which is going to be 25K. So remember, guys, a continuation downwards will be triggered below 21,500 now, as we did lose a prior trigger, which was 22,500. 22,500 loss resulted in a continuation downwards. The next leg down is continued below 21,500, which will take us lower. The continuation upwards will only trigger above 24.3. So we're in this weird little zone between major resistance and a major support, and currently the directional move will not take place until one of those breaks. And let's go ahead and discuss that now. So moving on to the larger time frame for Bitcoin, from a technical standpoint, guys, from a structural standpoint, from a technical standpoint, on the larger time frame, we are starting to see a drop in momentum. We're starting to see some weakness pop up, whether we're looking at the MACD, okay, whether we're looking at the RSI, whether we're looking at the gaussian channel, or whether we even look at the market cipher B, we can start to see a bit of momentum drop off. And what we're seeing here, guys, on the market cipher B is, of course, positive momentum, which has now printed a red dot signifying weakness, and now that positive momentum is starting to fall. And as you would know already, price action moves heavily on momentum. So if momentum starts to fall, we can generally start to expect the price to move in that same direction with momentum, as momentum is a leading indicator on where price generally goes. So that is quite concerning for the price action, guys. If we take a look at the MACD on the 3-day chart and RSI, we can see that we do have potential shifts moving forward. We do see the MACD dropping that positive momentum. It is falling. The momentum has not quite crossed negative. We are still slightly positive, but very, very close to a negative cross of momentum on the 3-day chart. Obviously, crossing into the negative momentum territory could definitely push Bitcoin below 21,500 and therefore reaching lower subsequent targets. If Bitcoin does lose 21,500, remember 21,500 being the short-term trigger for a continuation downward, Bitcoin is most likely heading to our next support levels, which we can see on the chart here, looking at 20,800 to 20,600. A loss of 20,800 to 20,600 will most likely bring Bitcoin down to retest the weekly POC sitting at 19,200. Let's make some space. 19,200, which is going to be this massive, massive area of support right over here. You can see we can extend it across 19,200, the red line, the weekly POC, the yearly POC, the level on the chart, which is the most significant area of support. This particular price point, historically speaking, is the largest area of historical orders and therefore the largest area of historical support. Retesting that level will result in a significant bounce, but losing that level will be absolutely catastrophic for Bitcoin going forward. Let's go ahead and take a look at the broader markets, the larger time frame, and then jump back into the short term and do a short term analysis. So currently I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Larger time frame, guys, Bitcoin is still underneath the 50 EMA. The 50 EMA on the monthly chart, as well as the 200 moving average on the weekly chart. These two moving averages are incredibly significant for two things. The 200 signifying overall macro trend, and the 50 EMA signifying massive areas of shifts on which we can expect reversals to develop from and occur from. Now, these two particular moving averages, the 50 EMA on the monthly and the 200 on the weekly, correspond with incredibly important horizontal levels as well on the chart. The 50 EMA corresponds with the 24,300 major horizontal resistance, which is occupying the upper resistance level of this horizontal resistance range. So we actually retested 24,300 perfectly here. And the weekly 200-day moving average, okay, on that weekly chart, is occupying the $25,000 resistance horizontal range. So these moving averages are also layered with major horizontal levels, making these moving averages even more significant, even more strong when it comes to the current level of resistance, but more importantly, significance in terms of reversals. If we are able to break above these, then macro is going to massively flip to the upside. We're going to be an official macro uptrend. Really important to take a look at. Let's take a look at a few other macro indicators. The weekly chart, we are looking at the Gaussian channel here. The price action is consolidating just underneath the Gaussian channel. Now, this is also something of concern. Generally, we're not looking for a macro flipping trend until the price action can break back into the Gaussian channel, such as here, okay? This is all downtrend from here on out, downtrend, 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 downtrend. We break back into the Gaussian channel. That is when we have a reversal in the downtrend. That is when a macro uptrend initiates. The macro uptrend will continue until we break back into the Gaussian channel, where we go into a macro downtrend, and so on and so forth, guys. That occurs that entire way. Macro downtrend starts, and the macro downtrend is still going until we break back into this. Now, we are not technically in a bear market anymore because we have broken out of the bear market reversal structure, which was that falling wedge structure. The falling wedge structure took us right to that target, which of course was that local top of the falling wedge, that first high in the falling wedge, around 24,300 to 22,600. However, the macro downtrend on the weekly chart, on the monthly chart, is very much now still in play. So for us to reverse that, we do need to break back into the Gaussian channel. Breaking back into the Gaussian channel will coincidentally occur around $25,000, again breaking a horizontal level and sending Bitcoin into a macro uptrend. So all of these indicators are kind of lining up and pointing in that same direction, targeting those same levels, those key levels of resistance that will trigger an overall shift in the trend and therefore show us or give an indication that the probability of a continuation upwards is much, much higher. Let's take a look at Ichimoku Cloud on a weekly chart. We can see a few decent things occurring here. We can see that the we can see that the price action is now above the conversion and baseline, which is obviously a good thing. We can see the baseline has pushed above below the conversion line, which is that blue line pushing above the red line. You can see in a very small time frame here, which obviously is a good thing, indicating an initial shift in trend upwards. But again, nothing too significant as the price action has not pushed above the clouds yet. We definitely need the price action to push above the clouds to see an overall uptrend initiate. And that is what we've been talking about here, guys. For us to see an overall uptrend, we need to see the price action above that 25K level. For us to see a bull market initiate, we need to see a monthly candle close above that prior yearly low, which is sitting around 30,000. You can see on prior instances here, monthly candle closes above that level sent us up into macro uptrends. These macro uptrends being the bull market lasting until we break back down below. Okay, so keep your eyes on that level, a very, very important thing to take a look at. Let's go ahead and bring up a few more indicators, such as the RSI, and we'll bring up the MACD, and we'll also go ahead and bring up the market cipher B, some momentum indicators, and we'll get into the short-term analysis. So market cipher B currently on the weekly chart, guys. Again, we can see momentum is definitely in a negative still. Remember, this is negative momentum. Actually, momentum looks like it's only just crossed positive. So we're seeing a little shift of momentum positive here. Nothing too significant. Again, that is a good sign, but again, nothing too significant here. Not a strong positive momentum. This is still weak positive momentum. If we expand to the monthly chart, we can still see overall negative momentum here. Again, this is actually the second time, according to the market cipher B, we've had negative momentum. The first time being all the way back in September 15. Moving back to the weekly chart, guys, let's take a look at the RSI. The RSI here on the weekly chart, again, pushing up slightly over here. We did, in fact, break out of that descending, falling wedge pattern over here, this descending resistance pattern, which in fact sent Bitcoin's price action upwards. We have also broken through that horizontal resistance on the RSI over here, which enabled that continuation upwards. But again, we got hit by a significant amount of resistance. And finally, let's take a look at the MACD on the weekly chart. Again, we are starting to see some weakness in the MACD here. We've had 2 weekly periods now with those 2 weekly periods each having lower momentum than the prior weekly periods. So that is suggesting a drop off in momentum at resistance and therefore a likely rejection. And that rejection is currently occurring. Now, let's take a look at short term, guys, and do a TA and talk about the probabilities of a continuation upwards here on the short term and downwards on the short term. As now we have discussed the key levels we need to break upwards for a continuation. We've also discussed the macro levels and the technicals. Let's do the short term. So on the hourly chart, guys, let's take a look at any structures we are seeing develop. I do see one structure potentially developing here, which of course is this descending channel formation, or you would call a falling wedge, or some kind of descending resistance pattern over here. So I would say this is a descending channel formation, as we don't have an equal touch on each side. I wouldn't say it's a bull flag, because we didn't have a flag pole. We just have a descending channel. That is why we call it a descending channel. So what we see over here, guys, is obviously a retest of that upwards channel. As you know, descending channels can last for quite some time. They can continue for quite some time. There's no desired amount of retests on each side. We generally do look for at least 5, but again, they can retest many, many more times than 5, or sometimes even often less than 5. But generally, we don't want to be looking for entries or massive breakouts on descending channels that have less than 5 retests, particularly one of these where we've only got 1 retest on the lower side. These patterns can shift and develop. Now, the reason we look for 5 points of retest, generally 2 on one side and 3 on one side, was it confirms the structure, right? If we only have 1 retest on one side and multiple on the other side, these patterns can shift. They're malleable to change over time, and therefore there's no guarantee that that structure won't change upon a breakout, and therefore you're jumped in on the incorrect time to enter. So looking at the structure right now, I'd still be looking for a break above here for a short-term entry, for a potential long, but again, that is just from a structural stance. From a structural stance, all in all, guys, we are still underneath that uptrend, and we are still underneath our major resistance. We are slightly above support over here. Nothing too interesting to be looking at from a structural stance, and definitely nothing I'd be too keen on taking a trade over. Let's go ahead and do our technical analysis really quickly. So MACD, we'll bring that one up. On the hourly chart, we can see we've just had a cross over here. Again, we've seen some negative momentum pushing in on the MACD over here. Again, potentially pushing the price down. On the RSI, let's take a look. We can see, again, we have dropped down below this uptrending support line on the RSI here, indicating a potential shift downwards in momentum. This could potentially be taking the price action down, once more confirming that crossover on the MACD over here, suggesting a shift in momentum. From a horizontal level, guys, if we go ahead and take this local top over here, we can see this local top over here has actually retested some of the lows of this prior consolidation zone, this prior area of resistance. Now, this is a potential resistance support flip, and again, an area of which we're looking for a rejection. Currently, the price action printed a doji candle above a upward trend, signifying a potential reversal, and the candle has dropped back below the 50 EMA, again suggesting a continuation downwards. I'd be definitely looking to see what happens around about the $22,000 level. If we do drop below the $22,000 level, I will expect Bitcoin's price to continue downwards into support. If we do find support anywhere around 22,000, we could potentially still bounce back upwards. Right now, I'd be looking for low risk shorts, meaning shorts that have a very tight stop loss around 5% or less. And I'd be looking to load up my shorts again if we do drop below 21,500. I'd be looking for longs if we do break back above 22,300. I'm going to leave the video there. If you've got any questions, leave them down below. If you're interested in learning how to do analysis, if you're wanting to learn how to trade, risk analysis, market psychology, all that kind of stuff, go ahead and sign up to Crypto Academy. Contact us over here. You can find all that information in our email where we'll contact you. We talk about market patterns, technical indicators, structures, candlesticks. We talk about market psychology. We teach you guys how to apply indicators and actually do step-by-step analysis. I've formulated, I think it was an 11-step or 9-step analysis technique that you guys can follow when you're doing TA. It's incredibly detailed and incredibly important. We go from step number 1 all the way to the last step, teaching you guys exactly what to look for in the first initial steps, how to layer analysis, how to layer technical analysis indicators, and how to layer structural analysis onto your analysis so you can get a best and more accurate